Hello and welcome to today's webinar, How to Calculate Indirect Rates and Project Profitability. Today's presentation is brought to you jointly by NeoSystems and Workday Adaptive Planning. I'm Don Carnevale, Marketing Director at NeoSystems, and I'll be the moderator for today's event. If you have any questions during the presentation, you can enter them into the Q&A area within Zoom. We will have some time at the end of the presentation to answer your questions. Also, we will make the webinar recording and presentation slides available to all registrants in the coming days. Next slide, please. Here's a quick look at our agenda. We'll begin by discussing some of the most common budgeting challenges facing government contractors and also dig into the impact of those challenges. We'll also walk through some key budgeting items that our GovCon clients express frustration with, such as integration with ERP systems, project budgets and profitability, variance analysis and rolling forecasts, as well as indirect rate calculation and reporting. Next slide, please. We're fortunate to have a distinguished panel of speakers today, including Shauna Burgoyne, Vice President of Finance and Planning at NeoSystems, Susan Mitchell, Chief Operating Officer at NeoSystems, and T.R. Longo, Planning Specialist at the Center of Excellence at Workday Adaptive Planning. Next slide, please. As I mentioned, this webinar is being presented jointly by NeoSystems and Workday Adaptive Planning. For over 20 years, NeoSystems has been the leading provider of back office services for government contractors, including outsourced accounting, finance, payroll, HR, hosting, IT, and security, including CMMC compliance. Next slide, please. Workday Adaptive Planning is an enterprise budgeting, planning, and financial modeling solution designed to enable more flexible and accurate planning. Next slide, please. Now to get us started, I'd like to introduce the host for today's discussion, T.R. Longo from Workday Adaptive Planning. T.R.?
Thank you, Don. Here at Workday, I am on our Planning Center of Excellence team. It is great to be here with all of you today. We are thrilled to share how Workday Adaptive Planning can be used to solve many of the challenges that are faced by government contractors. With that, let me start by asking you, Shauna, can you describe some of the key challenges that your clients face when it comes to budgeting for their projects?
Absolutely. It seems their clients come to us with several issues they face regarding their current budget process, and many of them are very similar. They typically have complex Excel models that are not accurate or reliable, and they have no way to integrate those models with their accounting system. They're usually looking for more flexibility when creating their project budgets and more visibility into their profitability on a project-by-project basis. Susan, can you talk about the challenges you typically face creating cost pools and indirect rate budgets?
Yes, as one of my favorite topics, indirect rates. So a lot of times one of the challenges that somebody has when they're trying to do their budgeting and forecasting is that they want to see the effects of, like, as they're going through the process, they want to see the effects of the changes and everything that they're doing real time so they can see what the effect is on their indirect rates. So one of the things that we're going to talk about today and kind of go through is how Workday Adaptive can help us do that and just show us those allocations and things for forward pricing, for variance analysis, so we can stay on top of that, especially in this changing environment we're in right now. TR?
That's right, Susan. Modern FP&A is no longer about hindsight. It's now real-time decision intelligence that guides what's next instead of reporting on what has already happened.
That's correct. They want to be shaping decisions rather than just reporting on them.
At Workday, we have gone to great lengths to ensure that adaptive planning is designed to be flexible to coexist with different ERP systems, making it suitable for a variety of organizations. Shauna, how do your clients benefit from the integrations with Workday Adaptive?
Well, as you know, TR, a lot of our clients are government contractors, and most of them use either Deltek CostPoint or Uninet as their accounting system. Adaptive Planning's REST API allows for seamless integration with either of those systems. Using CostPoint as my example, many of our clients want to import a large portion of their tables so they can use that data that's in CostPoint to prepare their budgets and forecasts. A good example of this would be the project types that are set in CostPoint. If a project's set up as a cost plus, we can trigger Adaptive to calculate the revenue on that project following a traditional cost plus buildup of direct cost plus indirect cost plus the fee that's set up in the revenue formula screen in cost point. On the other hand, if it's a T&M project, for example, we might want to bring in the labor categories and PLC rates associated with the projects so the revenue can be calculated using hours multiplied times the rate.
So it seems that there are a lot of complexities with government contractors. Let's shift gears and talk about how they can create a budget and Adaptive for their specific projects. Shauna, you mentioned planning revenue based on different project types. Are there other requirements that are specific to government contractors when budgeting for their projects?
So I'm going to dart in here because one of the things that's really important on projects is making sure that you're allocating your resources and that you're not over allocating them towards the project and you're keeping up with your resources. So Shauna, do you want to talk us through some of that?
Yeah, sure. Is it okay if I demonstrate in Workday Adaptive Planning?
That'd be great.
Fantastic. So this is Adaptive. I've opened some screens that I think would be helpful. I want to start with the conversation we were having just a moment ago with the integrations. This screen shows how we have integrated with multiple systems. It could be anything that you're using. Here, I'm showing CostPoint. We've also integrated with an Excel spreadsheet, a JDBC database. We have a Uninet connection. We have several things in our demo model here. But the one thing I would point out here is the staging table. You can see that we brought in several tables here from CostPoint. So anything that you're going to need to do your planning, you can bring into these tables so that way we can use that in the model and then push that directly into the model. Another thing, go ahead, Susan.
So Shauna, one of the things that you've used this a lot on with various clients is basically when somebody acquires another entity or they have multiple data sources like a legacy accounting system for the company they have acquired, the current one, and that's allowed you to basically pull both, this flexibility has allowed you to pull both of those in together.
That's exactly right. We have a lot of clients that have either, like, let's use this as an example, they switch from Uninet to CostPoint, but they're still in the legacy system or they've acquired this other system. So we have the Uninet coming in and we also have CostPoint coming in so that we can integrate their financial statements and see a whole picture of their company a little bit better. Another thing people may want to do is they want to bring in their accounting system and they may want to bring in something like UKG, for example, to bring in their new hires. So any of their projected new hires they may want to bring in and pull that into their database. Or if they have Salesforce, for example, and they want to bring in some opportunity projects and associate their P-wins with those projects, we can also calculate their opportunity projects as well. So they do get a holistic picture of what their projections might be.
Excellent.
So from there, just for the planning, Susan, you had mentioned resources. Here we have a dashboard that we've set up for ease of planning. We create these dashboards that allows users to easily go in, see the sheets and reports that are relevant to them. This is the labor planning sheet where users can assign resources by month to their projects, and it can be filtered by a specific org. See here, the org is called the level in Adaptive. You can filter it based on a specific project, or if a project manager, for example, wants to come in and only see their projects, they could do the drop down, filter it based on their name. In this case, I'm looking at the whole company because I like to do everything all at once. But so in this case, let's say we have all of your employees here, they're assigned to projects, and we have what utilization or what percentage they're going to be charging against those projects per month. You can also do it by hours. In this instance, we're doing it by percentage, but if you prefer to do it by hours, we can also build it by hours. And then below that, as you make changes to that, and I'll show you, but you can see a utilization report. So in this case, you have Nikolai Tesla. You can see here that Nikolai is overutilized in October. He's utilized at 230%, but he's underutilized in November. He's only utilized at 60%. And we have the conditional formatting there. So it's green if they're 100%, but it's purple if they're over and red if they're under. So that way it gives you a very clear picture of how your resources are utilized and how you need to make adjustments in your forecast. So with that, if I went in, let's say for Tesla, for example, and I went to, go up to the month here, August of 2025, and I added, I don't know, 100%, let's say, here in August 2025, and I hit save, you would see here, it automatically switches. It's showing 100% down here. As soon as that save goes through, it now goes to 200%. So you immediately see those changes and you'll know how you're impacting your forecast right there in front of you all on one screen.
And it's nice because of the color. Like you can
Yes.
quickly see, like on the dashboards, you know, where you have a problem, where you need to go back and inquire, like, hey, what's going on with this person?
That's exactly right. It's super helpful. We also have, for this one, you know, this is a PM dashboard is what we've called it. If the PM is doing planning, a lot of cases it may be a project control, but in this case, we're calling it the PM. They can go in and forecast their direct costs. In this case, there's an input sheet here. They can put project, which account, it's going to be a drop down, the org that's associated with it, and then whatever cost you're expecting per month. Another thing back on the labor planning sheet I didn't mention is you could add in, let's say, a new hire. So you're going to hire somebody, you want to go in, you do a drop down. We already have this new hire populated in our database, but you can select the new hire and then select the project that you want to assign them to. Let's just assign them to the first one there. And let's say that they're going to start in April of 2025 at 100%. I can take that and I know they're going to work on that the rest of the time. So I'm going to copy that forward all the way to the end. So it pushes it forward quickly and easily. And then from there, I can save it. And then as soon as that's populated, the new hire should show up down below in the sheet. And as you see right there, the new hire just popped in. They're starting in April at 100%. So it's quick and easy. And you can see exactly where you're forecasting your people. And these reports can be changed if you wanted to see, for example, your projects with the people. So you could have the project over here on the left and then show all the people assigned to those projects as well. So we can change those reports for you, however suits your needs for your business.
Okay, so
yeah,
Shauna, I have to ask for so now since you got us going on the projects.
Yes.
So can you show us the PSR or like the project one?
Yeah, so if you're a cost point user, you're going to be familiar with the term PSR. It's a project status report. So in Adaptive, we've built a project status report. You can see it here. It's also in this dashboard, so it's all in one place, easy to find. You can see it here. You can see, looks exactly like what you would expect a PSR to look like coming out of cost point. You're going to have your revenue on the top, your direct costs, your indirect costs, and then your fee at the bottom, or your profit at the bottom, just like on a PSR. And in this case, I have it filtered on, well, let me go over actually to the reports. I think that way I can filter it a little quicker and easier. Have it filtered on the entire company. If you want to look at just a specific project, you can just click on that project there, hit apply, hit run report, and it's automatically going to change to just that specific report. Same thing with all these other filters we have above. You know, you can change it to just if you want to see your orgs. So again, back if you want to see all your projects, and then you just want to drill down into one specific org, you know, you can go here, choose this org, hit run report, and then you can see how you're performing based on that specific org as well. So you can see the roll up any way that you want to see it, as long as we have that data in Adaptive. And most of our clients find this really helpful. And this is something we've built where it's, you know, month, then quarter, then year. But if you prefer to see the data differently, like if you want to see every single month lined up, January through December, we can do that. However you need to see it is how we can build it for you. But this is a good example of a good way to view your project profitability.
Great. Can we put up the next slide?
Yes.
So Shauna, since we're still in the solution, can you show us the process after a period is closed and that we want to see how we performed for the prior month?
Oh, sure. Let me go back there. Let's go back to the PSR. I think this is a good example. And let's say, let me go back to the top level. Let's just go back in time just for fun. go back to August, let's say, and we want to see how we're performing against our 2023 budget, right? So I'm going to run that report. We'll assume August just closed, the integration ran overnight, the actuals came in, we come in the next day, we run this report. It automatically updates with the actuals. You don't have to do anything. The report's there for you because the integration ran overnight. The actuals populated. You look at this and you're like, holy moly, I'm doing really well. I have $1.3 million here and I was only budgeting $125,000. But then you scroll down and look and you're like, wait a minute. My subcontractors, I have $60,000 here, but I was only budgeting $5,000. So you can start drilling into it. And here I see it's, in this account, I drill down some more, I see this account. This is the one that's kind of driving it. So let me go check on it. I'm going to click on this. It's going to open another screen. Once that's open, you can see, oh, it's to 2 different orgs. Well, this is the largest amount. Let me drill and see which org it's at. So I'll drill a little bit more and I see it's at this org. It's like, well, okay, I see it's at this org, but I want more information. So let me click on drill into transactions. From there, it'll open another screen and then you can see every single transaction that went into that $52,000 that we were looking at. Now in our model here in NeoSystems, we have project number, we have the name, we have a description, we have a lot of information in this transaction detail. So what information you would want to see from your organization, we could add to this report. It's pretty simple for our budget or for our demo model, but here you can see every single transaction that makes up that amount to help quickly see your variances and what's causing those variances.
That's terrific. Can we go to the next slide? Fantastic. It's amazing how straightforward this looks. Let's talk about rolling forecasts. Can you explain what it is and if it's easy to produce?
Absolutely. So Workday Adaptive Planning allows for multiple versions. And we kind of saw that before where you see, I put into a budget before we were looking at a working forecast. But what that really means is that, for example, you can create a base budget that's static and does not change, and then a high growth scenario and a conservative forecast all individually. Each forecast is stored separately in Workday Adaptive, and reports and analysis can be done comparing each version. In addition, the actuals are also in a separate version to make it easy to do variance analysis. In our own Workday Adaptive model at NeoSystems, we do monthly rolling forecasts where we roll our current month's actuals into our forecast and then we update the future months based on our current model knowledge of the business, but we still have our original budget that we keep static to compare that to. Susan, you wanted to talk a little bit more about the forecast process?
Well, the best thing that, I will emphasize, and Shauna talked a little bit about this, and, prior to being COO, when I was CFO for NeoSystems, the rolling forecast was one of the best things that, ever came around, because you literally could take each, like after you had closed each month, create your rolling forecast and project, based on the knowledge and everything you had at that point in time, easily like the rest of the year. So I could literally do a rolling forecast in like an hour. So it was as easy as, pulling everything, go and make your adjustments, and you had your accurate forecast. So for me, it made that entire process much more smooth, like much smoother. And I do have to ask you, Shauna, just because it was something that had, kind of recently come out, was the scenario planning. Which I was very excited when you started telling me about this. So I would just ask you to kind of like tell everyone a little bit more about it, because it was some pretty cool functionality. So tell us a little bit about it.
Yeah, so we do love scenario planning, and actually Workday, thank you TR by the way, just updated it so that way it is now shared scenarios. It used to be just personal scenarios, so now we can share these scenarios with multiple users. But what it means is that I could go into, if I were back in Adaptive, for example, that working forecast we were looking at, and create a scenario based on that. So it's going to take kind of like a snapshot of what we were looking at, create a scenario, and it's, let's say we anticipate we're going to win some huge award and it's going to impact our business dramatically. I can put that scenario in there into the scenario, put in the new revenue, forecast the labor, forecast everything out. It's going to highlight all the changes I make, but it's not really going to be pushed to our working forecast until we win that. If we win it, I can hit accept. It's going to push it directly into our forecast. and we'll see it right there. If we don't win it, unfortunately, we don't have to do anything with it. It'll just sit out there like it never happened. And it is amazing. So now that it's shared, we can push those out to other users. Let's say if you're doing your budget, like let's say I went in and did my budget as a scenario, I pushed it to Susan to approve. Susan can then approve it and push it forward before it actually hits the real forecast. It's a very powerful tool.
Yeah.
Very cool. Very cool. Can we get the next slide, please? Susan, we previously mentioned the complexities government contractors are faced with when it comes to forecasting. Maybe we dive into a topic that's near and dear to your heart, indirect rates. Can you describe some of these challenges that government contractors face?
So, yes. So what I will tell you is that when it comes to indirect rates, there are quite a few things that that government contractors have that are difficult. One is if there are what I call kind of tiering of pools. So where you have, service centers that feed into, overhead pools that, everything kind of feeds into other, other pools. Many systems have a hard time, at least planning systems have a hard time doing that. And one of the things, the other challenge too, is seeing in the planning process when you're trying to prove something. So like if your rate calculates and it doesn't seem accurate, right? And you need to go back and proof it. One of the things that is always a challenge is being able to do that, right? It's just a challenge in many planning systems, or if you're using the Excel methodology, which for those of you that have ever seen someone's Excel file that has all the pivot tables and all of the links and everything like that, they can be a nightmare to try to work your way back through. But one of the nice things that I like about Adaptive is that it is actually like, it's very simplistic to see like, what's being included in your, in your pool, in your base. It's very like, you can see your, in, real time, your rates. So if I go and make a change to any of like my assumptions or my employees or my salaries or, any of the components that make up the pool or the base of, say, Fringe, I can see that real time, that effect, and I can see it like for the whole year. I can see it over the periods. So Shauna, if you have an example that you can show.
Yeah. Yeah, let me show you how we've built it out for some of our clients. Here, I think this would probably be the best way to start, just to kind of explain how it works for most of our clients. As you all know, again, using cost point as an example, we can pull in the table associated with your pool, so we can see the base, we can see the pool, what accounts belong to it. Or some of our clients prefer, they think, our accounts are set, we want to just load our accounts in, we want to set which ones are in the pool and the base, and then move on and not have the integration. You have that option, but so for example, direct labor almost always in the pool of Fringe. So in this case, you can see, or in the base, sorry, the base for Fringe. In this case, you can see we've set what's called an account attribute. And it pretty much says, this account belongs to the base of the Fringe allocation. If we went into the Fringe accounts, for example, though, and I went into medical insurance, you'll see that this account is in the pool for the Fringe allocation. So this is kind of the structure, the basis for setting up your cost pool. So that way we can say where each account belongs. And I'll tell you more about that later, but this is just a good example of how the setup works to show, these are the allocations, this is how we determine what's in the base and what's in the pool. And then we'll take this and make calculations in the model going forward based on these accounts. So as you're in the model planning against these accounts, so this on G&A, for example, as you add cost to your G&A indirect labor account, for example, your pool, you're going to see that your rate is going to increase as a result of adding cost to it. And then if you go in and add direct labor, you're going to have to add that to the base. And if you're adding labor to your base, you're going to see that your rate's going down. So let me show you where you can see that. From here, we have an allocation sheet. I have it pulled up for just one of the orgs in our demo model here, just to see how it works. It's one of our performing orgs. So you'll see that it's just the Fringe, the overhead, the G&A for this account. And it's going to show all of the base and all of the pools associated with that. You'll see that it is, here's the total of the base, and then here's the year to date. So for example, this 163,000 should just be the summation. You see the sum down there of those 3 months. So it's just the year to date. And we're just putting these numbers in here so we can calculate the rates in the future. But if you go in and you make changes to your overhead cost, you'll be able to see here how it's impacting your base or your pool, depending on what you're changing, right? And then from here, we're going to go in, and then you can go into this sheet, which shows your rates. This top section is your target rates. As you all know, these are set already. They've already been approved. These are just going to input, and that's how you're going to calculate your revenue, specifically on your cost plus contract. So you're going to take this based on your disclosure statement and build up the cost for your cost plus revenue. But down here shows the calculation of your rates based on the cost that you're budgeting. So your fringe rate here will be impacted by any direct labor that you may put into the model, or it may, if you increase your medical expense, or if you're budgeting, right, and you think your insurance is going to go up, you increase that, obviously your fringe rate is going to go up, and you would see that impact here. So using this as an example, you can see it also, we calculate our wrap rate per month for every single org. So if I change orgs here to a different org, you would then see the wrap rate change for that org. And you would also see all the rates change for that org, depending on how you're budgeting in the model. So using this as an example, if I went into the personnel that feeds the direct labor for this sheet and the overhead labor for this sheet, and let's say that Jane Doe here did a great job and we want to double her salary, right? So we're going to bump her up to $200,000 a year. And I save that. I can immediately go back to this sheet, and you will see, based on those changes, you'll see, I always look at the service fee because that's the end result, but you can see that these results will change when I hit this refresh button. So you'll immediately see an impact based on whatever change you make in the model. You'll be able to see how that impacts your rates. And then once you've completed your budget here, you'll be able to submit those rates for approval. It has taken a second to refresh. I was out of the model for a bit, so it's taken a second for it to pop back in, but typically it doesn't take this long. But Susan, while this is refreshing, do you have any questions or comments?
I mean, the only thing I would say is that, you know, it is like rates are always such a challenge. Like when you're trying to, you know, when you're working your budget model and you're trying to see, okay, like what does this do? What does that do to my rate and everything like that? It's just, you know, again, it's such a handy tool to have to be able to do this real time. And I mean, I guess TR, you know, the world of GovCon, you know, like what are your thoughts on this?
So I personally, I can't imagine what you and your Pure Suite officers do without good reporting dashboards. Can we go to the next slide?
Sure. Before we do, I just want to point out here that the results of increasing that person's salary reduced their service fee, from 8% to -5%. So you did get to see the impacts of that right away. So I do want to point out that you did make a huge change. So you may want to consider reducing their salary back down below 200,000. But next slide.
That's definitely not a good rate.
Right.
Got ahead of myself. Hey, so Shauna, I know we saw the project status report in Workday
Yes.
earlier, but can you show us an executive dashboard, or
Yeah.
maybe even a report in Office Connect to demonstrate how Workday Adaptive makes reporting so easy?
Absolutely. Okay, let me go back to this database. I have a dashboard here. I'm going to refresh it just because the screen's been open for a while, so it doesn't freeze up on us again. So this is an example of an executive dashboard. So dashboards are super easy to create as far as from an executive summary or anything, even the ones that we were showing you earlier. You can just drag and drop whatever you want to bring in there, whether it's your report, a sheet, or in this case, it's just some KPIs and graphics. In this case, I'm showing, let me drill into a specific month here. I'm choosing random month here. There we go. So you can see here, it's showing the revenue, where it's got the version here. It's named funny for our demo, but this is our forecast. So you can see our forecast here, and then you can see our actuals here and how you're performing month over month. And it's a quick snapshot. So if your executives don't really care about all the details that we were showing you earlier, and they just want to say, how are we performing? Whatever data is important to them. So in this case, I have the revenue here. I have the gross margin, again, with the forecast and the actual. So you get to see your forecast versus your actuals. And they also wanted to see the EBITDA percentage and your net income percentage. And then they also wanted to see a breakdown of the cost. So we just put that in a quick pie chart, drop it in there, throw whatever accounts that you want to put in there to show what percentage of costs. So in this case, it's like, all right, well, 48% of our costs are direct costs, 30% are overhead costs. So you can kind of see a quick snapshot of how your business is working and how it's running from a higher level. You can also, from here, drill down into specific orgs. So if you don't want to see just the company and you want to drill down into whatever divisions are important to you, you can drill there, hit apply, and then it'll change it just for that specific org. Obviously, this org is not doing very well, but overall, the company is doing okay there. But so this is a quick way for your executives to see how you're performing at a high level. And then for Office Connect, so Office Connect is not within the web version of Adaptive. It's actually an Excel add-on. And I know Susan said some bad things about Excel earlier, but I love Excel.
Okay, so let me throw it in. So now you're misrepresenting me. So to be clear, I love Office Connect because I can literally go in and create a report and make it beautiful and have all sorts of crazy margins and all sorts of things in it. And basically the data will pull each time from Adaptive. So every month when something updates or we close the month or there's something that happens, you literally can come into Office Connect, refresh change the month, refresh the report, and it's there for you. You don't have to do any hand keying, like nothing. It's like once it's set up, it is there, and it makes reporting so quick and easy. So, and I think Shauna, like back when I was CFO, we had, I think, like 15 reports or something that we had to run at the end of a month in certain formats and certain things and stuff like that. And literally we could do it, once we were final and we had all of our stuff done in Cost Point. And basically, you would push, and sorry, I have to tell the story. So Shauna literally, from a ski slope at one point in time, I emailed her and said, I need you to update update Cost Point to Adaptive. And she literally texted me back 5 minutes later because she had done it from her phone. Done. And then she went on skiing down. Yes. So it's literally that easy. And these reports probably, I think they take maybe like 15 minutes to update like our report. So it's
amazing.
Yeah, I gush about this, but this literally is one of my favorite tools. So I'll let you go on,
Yeah.
Sean.
No, I completely agree. I am obsessed with Office Connect. It's I implemented our Workday Adaptive instance here at NeoSystems, gosh, 10 years ago now. And I've been the primary user of it. And the way we used to do our budget and the way we closed our month before, it would take me weeks to do our financial reports. I would have to go into Cost Point, run Cognos, do VLOOKUPs. I love VLOOKUPs, but do VLOOKUPs. But now I literally go in once it runs overnight. By the way, it runs at like 5 a.m. every morning, so it's always updated when I come in. Let's say we're looking at September here. We just closed October. All I have to do is change this date, flip it over to October, say okay, hit refresh, and it automatically updates the actuals and the forecast for October and the year-to-date numbers. Done. My report is now done. I will point out a few things here just so you know how it really works. Now you've seen the magic. Let me show you a little bit of the pull the wool back, pull the curtain back
Magic.
there. So here you can click on this, see the linked cells, and you can see what cells are linked. So the blue means that I'm pulling this data over from Adaptive. The green means that's a title. So I've brought that in so that way I know what month that I'm pulling it for, and it automatically updates it for me. And here I have just regular Excel formulas. So any formula that you want from Excel will still be there. It will still exist, and it can live with the data from Adaptive. You can do graphs. We do a lot of charts and graphs for our board meetings, things like that. So I update these reports, and it'll automatically update the graphs that I have attached to those reports. And any of this formatting is just regular Excel formatting. It still exists. I'm just linking this specific data so it automatically populates. The other thing I would say is you can send this spreadsheet to anyone, even if they don't have Office Connect. It's still just Excel. It will save it just as a regular Excel report. So you can send that to anyone. And for Office Connect, if you have restrictions, say you're only allowing certain people to see specific orgs, if they have Office Connect and they want to go in and refresh it, they can, the security still exists in Office Connect. So they can still only see the data that they're able to see. So they're not able to see the whole company when they hit refresh. They'll still only see the data that they need to see. But it's a very powerful tool, and I love it very much.
Great. Do you want to bring up the next slide? I agree. The Office Connect, my favorite function is the PowerPoint automating board decks, right?
Yes.
CFOs are famous for those 11th hour top-sided entries. That one change ripples through the entire deck. Well, now it's just with a refresh button, your whole deck's you're ready to walk down the hallway, not sprint down the hallway like the old days.
Exactly.
I don't know what you're talking about, TR. I never
Yeah.
did anything like that.
I don't think I ever reported to
Speaking
you
of my
though,
life.
Susan. So you might be the one CFO anomaly in the world. So Shauna, thanks for that demonstration. Susan, can you address why government contractors would benefit from using Workday Adaptive Planning?
Oh, so many reasons. So one of the things I would say is that there are certain things with government contracting that that government contractors have to fulfill. So like there's the federal acquisition regulation. So they have to report, they have to do their reporting and things in accordance with that. When it comes to showing their compliance with that, there's this wonderful agency called DCAA, that will come in and do various audits and things like that. And they usually, typically, some will have to do an incurred cost submission if they're having to do, these were cost type contracts. And the main thing, what I would say with the reason I like Adaptive for government contractors is that it has the flexibility. So unlike many planning systems that are out there, it has the flexibility to do what a government contractor needs to have done. So it has the ability to calculate kind of what we talked about, the indirect rates. It has the ability to support those. So if you're going to do a forward pricing submission to the government, you can actually literally support your forward pricing submission when you submit that so that people can see like exactly how you built it up. What were your assumptions? Everything like that. Like you can see that in Adaptive very easily. So it's very nice for those purposes. You can also do EACs, in Adaptive. So it's very nice to be able to do, like your estimate at completions. So there's just a lot of great functionality for government contractors with it. So.
Fantastic. Let's go to the next slide. Thanks, Susan. Shauna, can you explain why a government contractor would benefit from using NeoSystems as their Workday planning partner?
Yeah. So our team here in the Workday Adaptive practice, we have extensive experience developing the models that are built specifically for government contractors. We have an understanding of the data that's coming from CostPoint or Uninet and how it fits into your budget. Myself, I worked with a government contractor for 10 years prior to working at NeoSystems, so I know how to talk the talk, as you can hear Susan also. We understand government contracting. And we understand cost point and we understand adaptive. So I think we fit together well with what a government contractor would likely be looking for with a Workday partner.
Great. Susan, would you like to wrap up our discussion before we take questions? Summarize maybe what we've talked about today and how we can help others achieve success with their budgets and forecasts?
So we've talked about, sure. So we've talked about a lot today. So we've talked about, the various things that Workday Adaptive can do, from the reporting, from the rolling forecast, from the variance analysis, from indirect rates, the various project reporting you can do, the utilization, and resource planning and everything that government contractors need, to see. So there's a lot of that, that adaptive can do. And it honestly, it made, and I only usually will talk about products that I like truly like. And for me personally, this was a game changer as a CFO, because it allowed me to look at things quickly and make adjustments quickly and do analysis quickly and just move, I didn't spend my life having to do forecasting and planning, because the system was literally that simplistic and helpful, and could pull stuff quickly, could go back and it was great. And Shauna, we touched upon this a little bit, but just the fact, if there was an Excel file or something that we needed to load, just the flexibility that I could punt something over to Shauna and and be like, okay, I would love to have this loaded, and she'd be like, done. It was that simple. So, just to kind of wrap up, I guess, like I said, my main thing is just that it's such a simplistic system to use, and it facilitates, compliance and flexibility and everything, that a government contractor needs.
That's great. That's great. Thanks, Susan. And thank you, Shauna, for sharing your experiences assisting government contractors. Let's hand the mic over to Don to address any questions that may have come in while we were chatting.
Thanks very much, TR. So we have had a few questions come in. We'll get to those, but I do want to encourage everyone, if you do have a question, please go ahead and enter that into the Q&A area within Zoom. We will take a few minutes now to answer those questions. Shauna, the first question I think is for you. You talked a lot about project forecasting. Can you use Workday Adaptive Planning to produce financial statement budgets as well?
Hey, Don. Yeah, absolutely. Most of our clients, because they are government contractors, they are focused on their projects, but many of them also want to be able to see their income statements, their balance sheet, and their cash flow, holistically as a company or by org. And that is definitely something we produce regularly for our clients. So yes, good question. We certainly can.
Great, thank you. TR, question I think for you. Can I get Workday Adaptive Planning without purchasing other Workday products?
Absolutely. Workday has plus or minus 11,000 customers, of which of them 7,000 plus or minus are financial planning and workforce planning customers. But of those 7,000, 3,500 to 4,000 own no other Workday SKU. So, well over a third of Workday's customers are just financial planning customers.
Okay, great. One more for you, TR. Can you talk a little bit about the future of Workday Adaptive Planning with regards to AI functionality?
Yeah, this is an exciting area for sure. Workday, I think we've made two big announcements. One at Rising last year in the fall of 24, and then just after our fiscal, it might have been our annual report out to the street here in February. I like to say the agents are coming. Workday is developing numerous use cases leveraging agentic AI. We're developing on the back end and embedded in the core so that our customers only have to leverage Workday Assistant, which has been predominantly just a chat tool to date, but it's really going to be the driving force of our AI strategy. Planning is actually out in front, one of the most out in front SKUs that actually already has quite a few ML use cases built into the modeling capabilities. Many years ago, we developed anomaly detection, and as a former practitioner and a Workday Adaptive Planning customer, that was a fantastic add-in because it just lightened the load on my team's needs to identify anomalies. We still had to kind of research the anomalies and figure out what was the right thing to input, but at least it pointed out a lot of the errors. About a year ago, we came up with Predictive Forecaster, and in this last release about a month ago, we enhanced Predictive Forecaster. So we have plus or minus 8 ML languages that can be leveraged to help forecasting capabilities. I encourage my customers to start with like SG&A and things that if you're a little off, not the worst thing ever, just to build confidence with the ML solution, and then build up in your income statement from there. And then coming soon is Variance IQ, and this is the one that's got me and a lot of my peers completely stoked about. We are, any smart equation can pop up a variance, but it's really the context, the contextual reason for the variance that is what planners and analysts spend so much time trying to dive into. So our Variance IQ solution that's still in development, but it is, some early adopters are testing it out. It's going to not just provide the variance, but it's going to provide actual contextual element to it to minimize the haystack that planners have to dive into to find what's really going on with the business between budgets versus actuals. So a lot of really exciting things on the ML and AI front here at Workday.
Great. Thank you, TR. We'll allow just a few more moments in case any questions come in. Okay, there don't appear to be any additional questions, so we'll begin to wrap up. Just want to remind everyone, NeoSystems has been supporting government contractors for over 20 years across all of our different lines of business, really focusing on the back office operations of those government contractors. We'd love to speak with you about your business, how you're handling your budgeting and planning process, or other areas where you may need some assistance. And to wrap up, you can see on your screen, these are the email addresses for all of our speakers today. We encourage you, if you have any specific questions for any of them, they would love to hear from you, to contact them and ask your questions. They'd be happy to respond. So that will do it for today's presentation. We'll conclude for today. We want to thank everyone for attending. We want to thank all of our speakers, Shauna, Susan, TR. Thank you very much for all the great information today. And we look forward to seeing everyone on our next webinar. Thank you.